This is the More Doors podcast. We are back with episode 66. It's been a while since I've been in this chair, Jesse. I missed you, bro. We have an amazing guest to restart our podcast series. We'll be back to talk to him in just a second while you check this out. All right, folks, we are back. Episode 66 of the More Doors podcast. So much has changed since we've been together. Before we go anywhere, I definitely want to thank Big Dog, best beard ever, Jesse Showalter and Tor Studios. Go check out Jesse at torstudios.com, T-O-R-E studios.com. He's going to take care of you, all your podcast and multimedia needs, and he's a hell of a guy. So just send him an email once in a while and say hi. How have you been, brother? Yeah? I see you've been super busy. Lots of shows going on. That's awesome. Good for you, man. I'm so happy for you. All right, we are here with an amazing guest today. Longtime friend, someone I admire very much, very active in the community. Nick DiLeone from Leone Real Estate Partners. How you doing, Nick?
Got it. Pretty good.
Not bad.
Yeah.
Good? Yeah.
Yeah.
Awesome. Nick's had an inspiring career in real estate, and we're going to talk a lot about that today. Nick, for those that don't know you as well as I do, why don't you tell everybody a little bit about yourself, where you're from, where you invest in, and maybe what got you into real estate investing to begin with?
I'm originally from the New York City area, born and bred, worked in New York City for many, many years, worked for an institutional company called Nuveen Real Estate for 15 years. Then my wife and I moved out to California, San Francisco, did that for a couple of years, worked for a value-add industrial shop for 2 years, kind of got sick of California a little bit and the politics, and we moved to Texas about 6 years ago. Was looking for jobs in Texas in the commercial real estate space, and COVID hit 2 months after we moved to Texas. So we launched our syndication business through COVID, and been going ever since.
Nice, man. What markets do you invest in?
So we've done some RV park deals kind of around the country. Mostly Texas at this point. And we focus on kind of our own deals in multifamily and warehouse deal that we closed last year that we're about to sell next week.
Really?
Yeah.
Good for you.
Yeah.
I'd love to hear more about that. I mean, that's a pretty quick turn.
Yeah, it's pretty crazy.
Yeah?
Yeah.
All right, well, let's not beat around the bush. So before we go any further, though, like there's more to this story. So last year, you and your group, you closed 2 deals on the same day, and if memory serves, one was multifamily and the other was this industrial asset.
That's right.
So, dude, like closing 1 deal on a day is stressful enough. Doing 2, walk us through how that happened, please.
Yeah, so it was kind of crazy. It wasn't intended. It was very stressful. So I have partners on the multifamily deal in Hotham City, and then another different partner on the warehouse deal. And I stopped in Hotham City to get some food. I love Vietnamese food, and I had a banh mi sandwich. And my nose was dripping a little bit, and I was, what's going on? I had a nosebleed. So I was like, wow, I need to like calm down and de-stress because I'm closing 2 deals in one day. It's pretty freaking stressful. But yeah, it was pretty amazing to close 2 deals in one day.
Nice.
Yeah.
So when you're done closing 2 deals in one day, like, do you just go take a nap? Do you go to the bar? Right? Does your wife make you a great dinner? Like, what happened? Yeah,
no, we didn't. We got to work. We just got to work because they're both value-add industrial deal, multifamily deal. Mm-hmm. That's kind of my strong suit, my asset management background. That's kind of what I did at Nuveen and Berkeley Partners. So we just got to work.
Nice, man.
Yeah.
Good. That's the good answer. That's the one everybody was hoping to hear you say.
Yeah.
Nice. So your history prior to this one industrial deal was all multifamily. So what caused you to want to, diversify the asset class?
Yeah. So I'm in a mastermind called GoBundance, and I met my industrial partner through GoBundance. I call him the triple net ninja, Scott Hare. He's been doing triple net sale leasebacks for about 20 years. He's really good at it. So basically wanted to get back into warehouses. So I did warehousing deals at Nuveen and for 2 years at Berkeley Partners. So I wanted to get back into that. We found this deal off market. We're going to talk about the Meetup. But the deal was sourced through the Meetup, kind of off market. I was helping a guy sell the property. We got some broker's opinion of value on the property. I thought to myself, why don't we just buy this off market. And we kind of came to realize that when you have a single tenant property, because that's what this was, single tenant owner users will pay a lot more.
Really?
So we were in contract for a certain price, and while we were in contract, we started getting offers above the property that the value that we were going to buy it for. So we're like, okay, let's keep this thing and try to sell to an owner user. So my partner is a broker, he has his broker license. We tried to sell it ourselves. We got a pretty good set of offers throughout the summer, but we decided to list with a broker, and the broker got over $1 million appreciation in the sale. So we're about to sell next week to an awesome, buyer, and they're buying all cash, and it's going to be a great round trip deal for our investors.
That's awesome. Oh, that's awesome, man. Good for you.
Yeah.
So what did you do to the property between buying it a little over a year ago and now?
So one of the kind of secret sauces was that the fact that this seller really didn't know the dynamics of selling into an owner user. They'll pay a lot more money. There's a lot of tax benefits, as we know in real estate. You get cost seg, et cetera. So the owner of the user gets all those benefits. We improved the property a little bit. There was a crack in the foundation that we fixed. There were some issues with the concrete outside in the parking lot that we fixed. But the main value add was, selling to an owner user.
Mm. Gotcha. So the company that's buying it, they're going to occupy it as well?
Exactly.
Got it.
Exactly.
Got it. Sorry, it takes a little bit for me to connect the dots, but that's awesome, man. Good for you. Yeah. How's that multifamily doing for you?
It's going well. So I was going over some numbers this morning. So we focus on light value add. We like this particular property because it's a nice number of units, 109 units, built in 1969, but it had a newer roof, about 4 years old, and a new boiler. So it takes a lot of the CapEx risk off the table. And since we bought the property, we've increased the NOI year over year, a little over 20%, which is pretty good.
In this market, that's great.
Yeah, it's pretty good. So, a good amount of that has been a decrease in real estate taxes. We protested the taxes, got it down a ton. We litigated the taxes. Insurance has come down. We've also increased rents. But it falls in line with kind of previous ownership that we've had with a Fleetwood Square property in Waco. We focus on kind of light value add and nibble around the edges with asset management. Awesome.
I want to come back to asset management because I'll never forget a conversation you and I had like a year-ish ago. But I want to double tap on that asset. So C-class workforce housing is a tough place to be right now.
Yeah.
Right. We've seen values come down. I think that segment of the market is torn. A lot of those folks are in financial pressure, but the folks that are kind of at the upper end of that C-class resident base, they can now jump into B-class because rents in the area have come down so much. So how have you and the team been able to manage and mitigate that?
So one way to mitigate that, one thing we like to do, we've done this with our RV park deals, is to put a good amount of CapEx into the property right away to show like new ownership cares about the tenants, they care about the property, because potentially you might increase rent. So we want to show that they're getting some sort of value. So for that particular property, you can see some staining on the mansard. It has that kind of like 70s, 60s mansard. You can see staining on the mansard because there wasn't gutters around the mansard. They redid the roof, repainted the mansard, but it was stained. So we put gutters around the mansard to prevent that staining, and then we repainted the mansard. We upgraded the playground, and we made other kind of upgrades with the pergola and things like that to show kind of like tenants like, hey, look, we're improving the property. So that's really kind of helped us increase, the rents at the property.
Awesome. Good luck with that one. It sounds like you guys are off to a heck of a start, especially in this market. I want to double back to what you just said about asset management. So I remember you and I were on a call probably 12, 15 months ago, and it was very clear to me that you have a very good definition of what asset management is. And I think there's some folks out there that may not really understand the difference between property management, right, and asset management. So can you walk us through kind of how you think about those things? Because I think you're an amazing asset manager. How do you take that as a discipline? Yeah.
So at Nuveen, it was interesting. We were a very old school kind of company. We run at one time kind of like it's a nonprofit. A lot of the money that came into our real estate funds came from college professors, so kind of nonprofit. So we run kind of a nonprofit. A lot of the asset managers there, we get really into the weeds of sometimes maybe too much in the weeds of the property management space. So I kind of cut my teeth on that mindset. So we like to say we outsource property management, third-party management, but we do get in the weeds and we layer a lot of controls in place on our property managers. And we like to call it second-party management because we get in the weeds. And it takes a special type of property manager to kind of deal with our level of detail, where we kind of like to get into the detail. So I headed asset management at the value-add industrial shop. One of the main things we did was engaging with a third-party company that helped protest taxes across the country, dealt with the insurance nationally, that sort of thing. So really managing expenses, setting the rents. One thing that we're really good at and diligent about is making sure that we're setting the rents properly. And at Nuveen, we had a process of having a competitive set and having like a rent survey. So we saw at that Oaks at Chain Lane property, we really didn't have that thing updated by the property manager. Me and my partner, we got frustrated. The next day, we just drove the market. We started driving the properties, finding out what they're charging for rents, and we kind of reset our rents based on that market survey. So sometimes you have to just kind of roll up your sleeves and step into that seat of a property manager, but you still need to give them autonomy so that you're not like breathing over their shoulder.
Yeah.
So it's a delicate balance.
Yeah. So yeah, I have this. I've had some observations. We've had to make a couple of third-party PM switches in the last couple of years, right?
Yeah.
I think when you think about that COVID era of late 20 into 23, when money was just being printed and folks were just moving around because they could, I don't want to say property management was easier, but it was almost easier,
It was easier.
right? And
easier.
and I think that this kind of part of the market cycle is not just tested owners and operators, but really put a lot of pressure on third-party property management company that actually you need to screen for fraud. Folks are nowhere near as on time with rents as they were. We have some unemployment issues. So how have you managed to, number one, vet the right property manager, and then two, hold them accountable?
Yeah. So we went through an interview process, and this is something that we would do at Nuveen. We go through and interview the third-party property managers. We have a matrix, kind of comparative matrix to compare kind of everything. You just want to make sure, under the hood, they might be charging 3%, but how are they calculating that 3%, right? So they might add on additional charges where you're not really paying 3%, you're paying 5%, that sort of thing. Obviously, you want to talk to other operators that have used that property manager. You want to see if they have other properties in that area to get some economies of scale, right? And I would say that one thing that we did at Oaks at Chain Lane, sorry about that, was our property manager, the in the C property manager left us for another property. We continuously maintain contact with her because we weren't sure if the new property manager would work out. I was texting her directly, maintaining the relationship, and it ended up she wasn't happy with that particular property, and she came back to it, came back to our property. So we had some issues with the new property manager, the person that was sitting in the seat. We had to let her go. We kept the property management company, but she's been crushing it. So our occupancy went down to 85%. We had a lot of issues. We're now like pre-leased almost 100%.
Good for you.
So she's been crushing it. She's really good. So really, especially the property management company is super, super important because you have policies and procedures in place. The regional is super important. But when you have a property that's 100 units, which is typically, one person inside, property manager, one person outside, maintenance person, that person sitting in the seat is super, super important. And you need a special person to be able to do that because a lot of bigger properties can have like a manager and an assistant, that sort of stuff. And that's who we had before. And I think she was used to having support, and all the work falls on that one person. So when you have just one manager, it's super important to have that like super star person.
Yeah, I mean, they're the front end of your business, right? They're going to talk to every single prospect and build relationships with all your residents. Super important. It's been challenging because finding that dependable person who's going to show up for work every day like they love it because they actually do, and really invest in the community and the residents, I feel like it's become a lot harder to find. And there's been there's been a lot of churn in that business in the last couple of years. And I look at resumes, or we get people that reach out to us and they want to sit at our properties, and it's like, you don't stay anywhere for more than 9 months, right? That's not the property.
That's not your track record.
Yeah, exactly.
Yeah, it's not good.
Yeah.
Yeah, no, it's hard because when I was at Berkeley Partners, the industrial shop, we had in-house management. And, those property managers kind of rolled up to me in a way, I guess I headed up asset management, and it's a hard job. The shit just rolls downhill. They just get treated like crap, and people don't respect them, and they don't get paid a lot. So I understand it's really, really hard being in that position. So yeah, it's a difficult business, and that's why you churn. You're constantly interviewing people. You churn through a lot of property managers because they don't get paid a lot. They don't get the respect that they deserve. So we're very blessed to have the property manager that we have now, and we're glad that we kept in contact with her and brought her back because the property is performing really well now. Awesome.
Okay. Best wishes on continued success there, my friend.
Yes.
I wanted to talk about the meetup.
Yeah.
So you and I met really spent some time together at a Jake and Gino event one day. But I know you've been very active in the North Dallas meetup space. I remember listening to Bigger Pockets a decade ago, and it's like, look for a meetup in your area, and if there isn't one, you should start one. Yeah. So did you take a page out of the Bigger Pockets playbook and just do that?
Kind of. So through Jake and Gino, it was kind of through them. I don't know if you remember Will Coleman. He was kind of like their debt person. And I did a few deals with him and did some hard money loans with him. He was their debt person. He is originally from the DFW area, moved to Tennessee to work with Jake and Gino, but he started up a meetup. So he kind of handed the baton to me and said, hey, I want to start a meetup. Let's I'm new to the area, just when I moved from California. And then COVID hit. COVID hit like right away, like right when we moved. So we're like, well, we still want to do this meetup thing. So we just did it through COVID. We did it online. We had Neil Bawa as a guest. We had a bunch of different people, Rob Beardsley as a guest. And so we just kind of kept it going through online, which has been great, which was great. And then once COVID started opening up, it was an Old Capitol event. I saw Yoshi Asano there. I met him at his meetup right before COVID started. And I'm like, I'm thinking about doing an in-person meetup. He's like, why don't you just join my meetup? So we joined forces. It's been like over 3 years, and we've been doing this kind of in-person meetup every single month. It's interesting. The attendance at the meetup is indicative of the enthusiasm in the market.
No kidding.
So we just had a big meetup. We teamed up with Momentum, Dustin Miles, and Hayden. We had 140 people come to our meetup.
Wow.
So part of that is the enthusiasm. Part of that is like we shared our list to kind of like grow the meetup. But we know that you could kind of feel it in the room that people getting excited again about multifamily. And again, we see it in the attendance. We kind of know based on how many people attend the meetup, what the enthusiasm is in the market.
Amazing. Yeah. And for those who don't know about the meetup, is it just multifamily? Is it just real estate investing? Tell us a little bit about it.
Yeah, so there's a lot of multifamily investors. A lot of people that come are multifamily investors. We got multifamily brokers, but we call it commercial real estate mastery and more because we also do warehouses. We also do RV parks. Yoshi does hotels in Belize.
Oh, wow.
Which is super cool. So there's a lot of multifamily specific meetups. We try to be kind of more than that. But there are a lot of single family people that come. There are a lot of multifamily people that come, and that often is the focus. But for example, me and my partner were presenting in a few weeks at Scion Construction's headquarters, talk about triple net investing. Which is kind of the warehouse deal that we did. Yeah. We're going to talk about that. And we're also going to be doing a tour of the property, which is super cool. So everyone's kind of like doing multifamily, investing and tours and things like that. We're going to talk through the case study of that particular property.
I love that. Yeah. Nice, man. David's over there now, right, Scion?
Yes, he is.
That's awesome.
Yeah. And
nice.
He's my meetup partner.
Yeah.
Yeah.
Small world.
It's super small.
World. One door opens the next, right?
Yeah.
I was texting with David a couple weeks ago. I got to grab lunch with him here sometime soon. Does he still have baby goats running around the backyard? Or?
I think so, yeah.
Yeah. Baby goat yoga at David's house. That's where your next meetup should be.
That's right. Yeah. It would be different.
Wives are welcome.
It would be different. Yeah.
Exactly. Fantastic. So we were talking a little bit before the show, Nick, and I think there's a lot of talk about this in the business, especially after the heels of Retcon, where most of the attendees came back with, the conference has become very tech heavy, right? And I've seen a lot of press lately from Dirk, the new CEO at RealPage, talking about how the importance of your core being AI and AI not being a plug-in to an existing SaaS product and stuff. So I think there's a lot of chatter about this in the market.
Yeah.
How have you and your team embraced AI in this Claude and ChatGPT driven universe that we live in now?
Yeah, no, it's a great question. I didn't talk about it before, but I started out in IT. That was my transition. So I worked at Nuveen Real Estate. I was building mortgage and real estate systems for those guys, in their big, multi-billion-dollar funds. And I fell in love with the business. So I went back to school at NYU, got my degree, and then pivoted to the business.
I went to NYU.
Okay, so
Nice.
yeah, I went to the Real Estate Institute.
Awesome.
So my intention was, when I launched my business, I was always going to be kind of tech focused, tech forward, implement IT to kind of help move the business forward. But that stuff's very expensive. And I know what like we built systems. We had this roadmap project, like tens of millions of dollars. A lot of it got thrown in the trash, unfortunately. So I was very hesitant about spending money on technology. And then this AI thing started spinning up. I have a couple of analysts on my team, and they started going deep on Claude specifically, and building little agents to kind of help underwrite properties. So I was like, okay, this is the time that I can kind of leverage my IT background and start building something. So I'm like, okay, let's build the Leone deal machine. It's going to do everything. It's going to underwrite. It's going to source deals. It's going to do everything. And I was just chatting with ChatGPT to kind of figure it out. We have an investor that has worked. He works at OpenAI, and he also worked with a system called Twilio, which is kind of a texting tool. I'm like, okay, so we'll build something that's similar to what we used before at one point to cold text owners. And I started chatting with ChatGPT, and it basically said, like, if you're building something really complex, your code might be too brittle to kind of build something. So we kind of abandoned that. And it kind of made me realize, like, there's a lot of chatter about AI, but if you're trying to build something that's like really robust and really complicated, it's difficult. Because we had one analyst that kind of rebuilt our underwriting model through Claude, just like 8 hours of vibe coding. They call it vibe coding. Yeah. But if we probably dug into it, it's probably not. It's going to break, right? So lightly now, we've pivoted to just using and creating agents for, let's say, to help underwrite multifamily property and figure what the gross potential rent is for the property. Take the rent roll in, put it in, and it pulls out a number. We have a bunch of different levers that we can kind of put into Claude to kind of give us the GPR based on renewal probabilities and things like that. So we're basically piecing different pieces of the underwriting process into like separate agents. And eventually we might kind of roll this up, but it definitely allows us to move faster, but I think it's a little overhyped.
You think so?
Yes.
Tell me why.
Just because of what I said. I mean, I thought I could vibe code this huge deal machine. And it's like, no, you can't really do it. Like I asked ChatGPT to come up with like a project plan. It's like tech lead to kind of integrate all this stuff. That would probably have to be me. And I haven't coded in 15 years. And I invested in a tech startup, and the head of IT was there. And I told the guy, and I said, hey, I used to code. And he's a Russian guy. He's like, you look like you could not program your VCR. So like I really wasn't a good coder. I know enough to be dangerous, but I'm not a tech lead for like the deal machine.
Sure. Sure. I mean, we have adopted AI. First of all, Nick, I used to get frustrated with Nick because he'd be sitting here like asking ChatGPT what questions he should ask the guests in real time. No shit. And you never see it because he's never on camera until he asked the question. But 9 out of 10 times that came from ChatGPT. Right? So I'm like, we got to be more thoughtful, Nick. But it works, right? And I was ChatGPT for a long time.
Yeah.
And what I've seen out of Claude recently is just mind-boggling.
Yeah.
You know, the co-work app within Claude. I was just having a conversation with our director of marketing yesterday. We're working on a go-to-market motion, and he connected Claude to his Outlook box, his Gmail box, our call recording software, a bunch of other stuff. And he like gave it a command to summarize all the meetings that we had on this specific topic and all the content that we had exchanged. And it intook all this stuff and came up with like a visual representation of everything that we had done and needed to do, and started to set project parameter timelines and all kinds of stuff. I'm like, wow, that's cool.
Yeah.
You know, and I'm sure there's so much more cool stuff out there, but you know, my first thing now, the kids call it search it up now when you use Google. I don't know. I don't remember how old your kids are, but my daughter's 13 and my son's 12. And when you use Google now, it's called searching it up.
Oh, okay.
Yeah. Or
you're a grandpa.
That's right. That's right.
Yeah.
But at ChatGPT, I just tell it what persona I need it to be. Or Claude, I tell it what persona I need you to be my RevOps consultant right now. I need you to be a marketing consultant right now. I need you to be a personal health consultant right now. And here's my circumstances, and like ask me questions to help you understand the problem better. It'll come back with 10, 15 questions, but the output is unbelievable.
Yes.
Unbelievable.
Yes.
And I don't know if you've used it yet, but you know, are you familiar with Gamma?
No.
So 3-4 months ago, I'm like, I wait until the last minute to put a presentation together. So I had all my notes and I put them in a Word doc, and I go to Gamma. I was expecting to be up all night working on a PowerPoint, right? Because I don't know about you, but like you never get the designs right. The text boxes are wrong.
The numbers have to match.
Exactly.
Slides,
that too, right? But you take a Word doc and you tell what you want your slide deck to say and upload that into Gamma. And in like 5 minutes, it comes out with a perfectly formatted PowerPoint deck that you can literally go slide by side and tell it what you like and don't like, and it'll redo it. It's a game changer, bro.
Wow.
Yeah, game changer. So between that and Claude, I think, and it was so much more. We're jumping into Clay. We're jumping into N8N for workflow stuff. And I think getting to the day of, you know, it kind of sounds like your Nirvana too, where you can just say, here's an OM from a broker, right? Go tell me what this thing's worth.
Exactly.
Right? And
it's a black box. It's like, we're not there yet. I mean, it's changing so much exponentially.
So much.
But we're not there yet.
I mean, one of the things I love when I first started to really get into AI, it had I felt like every day it forgot who I was the day before. Oh. Right. And now I can like talk to it and ask it a question, and it remembers.
And it remembers, from
months ago. Months ago.
Yeah, we're looking at a car wash deal right now that we're excited about, and I kind of put one sentence in there, and it knows exactly. It's like, related to this car wash deal, this is why you should do it or shouldn't do it, and this is how you should stack the pref equity. Blah 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 blah. It knows exactly where we kind of, you know, left off, which is pretty cool.
Yeah, you want to hear like total like vulnerability moment? So I was talking to my therapist a few months ago about AI, and she said, you know, the most difficult fights I have to be a part of now? She's like, when one spouse uses AI to work out the problems and the other one doesn't. So like,
interesting.
People in relationships, one person is going to AI.
They go on AI.
Yeah, and asking the questions about the relationship or the problem.
I'll tell you, I mean, we'll go even more vulnerable. Like, I was fighting with my wife the other day, and I kind of put it in there. I was like, rah, 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 rah. And AI came back. It's like, no, she's kind of right. And I told my wife, I'm like, AI's on your side.
That's awesome.
Yeah.
That's awesome. So look, I think we're at a very interesting time in the market right now. We were just talking before the show, you know, I'm sure you have too. I've seen an increasing number of deal emails in the inbox saying this is bank owned, or I think basis correction I saw from a well-known broker that was selling the deals at the top dollar 3 years ago. That's and now talking about the basis correction. Yeah. What's your take on what's going on?
So yeah, it felt like this is finally going to be the year. Our team had big goals to get a lot of deals done this year. We've made sent in 2 LOIs. We made buyer interviews on 1 deal. We sent an LOI this weekend, actually, on a deal in Duncanville. Unfortunately, I don't think people realize how much interest rates have climbed because we've been in this war with Iran, Strait of Hormuz, et cetera. They went up 75 basis points in the past month.
Wow.
So where we were almost at like a 5% interest rate with agency, now we're at 5.75, and we're underwriting a 6 just in case, interest rates increase. And really that's going to decrease prices, right? So I think the pipeline is going to start slowing down again if this war thing continues and interest rates stay volatile. And generally, this volatility doesn't die off. If we left tomorrow, the volatility doesn't die off in like 1 month. It usually takes 6 months, for it to die off. So I think we might push in now to 2027. When it's like everyone's waiting. It might take a little bit more. I think values are going to decline more. There's going to be more distress. I guess it's going to take a while. So even the deal that we offered on, the deal that we made best and final on, I'm kind of worried about that guy. His interest rate just went up, and he probably can't pay as much. He might try to retrade.
Close fast.
Yeah. So it was mind-boggling to us when we got the debt quote back. It's like, okay, let's maybe make it 5.5, 5.75. When it came back 5.75, we're like, wow, it increased so much in the past month since we've been at war. So hopefully, people stop dying. No one likes war.
Definitely not.
Let's get out of Iran so we can stabilize the markets and start doing deals.
Yeah. I feel like it's taken, number one, I feel like it's created an enormous amount of anxiety in the marketplace, right? Just people don't know which way is up and which end of the bipolar spectrum we're going to get out of our president on a day-to-day basis. And what are we actually really even doing there?
Yeah.
Right? And then you get oil where it is, and gas. I was in Hawaii a few weeks ago, and gas was like $5.50 a gallon. Like, everybody's on bikes.
Yeah.
I think we just got to kind of come back and focus on the homeland here in a little bit. We got Oracle laid off 16,000 workers yesterday via email, right? Companies are definitely continue to shed employees because of everything with AI. And I think we just got to stabilize a little bit here before we go much further.
100%.
Yeah. We'll see what happens. So aside from debt, have you seen, it sounds like you're offering on deals. Have you seen any movement on cap rates up or down?
Yeah, I mean, cap rates have definitely expanded. We're focused on C-class because people are kind of moving away from that. We feel like we've stabilized our Oaks at Jane Lane property. It definitely takes rolling up your sleeves to deal with those sorts of properties. The delinquency is high. Rents have come down a ton. The property that we offered on, we looked at the OM from 2 years ago. Rents overall have decreased $300 to $200 per unit. So that just decreases the values of the property, right?
Yeah.
So yeah, we've seen cap rates expand in the C class especially, and that's why we're kind of leaning in. Everyone wants flight to quality. That just increases the competition, the number of tours, the number of bids. So we rather look at the C class stuff where you have like 10 sort of tours and maybe 5 or 6 offers, right? There's less competition because people are scared. Because we do think, especially in DFW, it's not baked into the CoStar rent growth numbers because we use those numbers in our underwriting, so we don't have to fight with our investors about that. But we do think that the market will pop, and you're going to see 5 or 6% rent growth in DFW. Eventually, we don't know what's going to happen, but it's eventually, hopefully in a few years. So we're still bullish. We're just underwriting is just a little bit more conservative.
Yeah. So I want to double tap on that for a second, because what you just said is exactly how I think about things, right? And the resounding message in the marketplace, at least here in DFW in the last 12 to 18 months, has been flight to quality, right? Go for the 2,000 plus build, the institutional stuff. There are crowded buyers, but you're going to get a better asset with less headaches, less CapEx, so on and so forth. But when you have all the attention running in that direction, like what's left, and you have pretty much C class, because there's not a whole lot of B class in Dallas because of the building restrictions from way back when.
Yep.
How do you stand by that investment thesis, which is arguably a contrarian point to what the market has been hearing in the last 12, 18 months?
Yeah, I mean, it's really, so there's two things. One, we focus on life value add. So we don't necessarily say, hey, we're going to renovate all these units, 50% of the units, we're going to get $200, $300 rent bumps. We don't think that's possible. We think that's very difficult to do in this market. With my asset management background, we do nibble around the edges, right? So we do, if they don't have a laundry room and they have a CSC contract, or it's about to be terminated, we put laundry machines in, so we get kind of the full value. We look at reserve parking. We look at cable contract. We just did that cable and internet contract. We did that at Oaks at Chain Lane. And just really just manage that really, really well. Focus on the operations. Kind of that's the theme, right? You talked about it with the property management. You need really good property managers in place. And really, we know that cap rates have compressed. Have expanded. We think they will compress over time. So that's really it. Manage it really well, nibble around the edges, light value add. And then eventually what we've doing with all our properties, we have some CapEx built into the back end. So when we're about to sell, we renovate a few units. The market's starting to pick up and we're getting those $200, $300 rent bumps on those units. And then you sell the dream like, oh, look at all this meat on the bone. You can renovate all those units.
Sure.
Add the value.
I like it. One last question before we start wrapping up, Nick. So you mentioned industrial, you mentioned car wash, but I know the core of your business, right? I mean, you've been in RV parks, multifamily. Sounds like you're looking to diversify out just a little bit. But I've seen a lot in the investment community, Facebook and other socials, where I feel like some folks have just gotten shiny penny syndrome.
Oh yeah,
right. It's like
now it's businesses.
Yeah, not exactly what I was going to say, right? Like you're buying businesses, you're buying, specialty whiskeys. We're doing all kinds of crazy stuff.
Yeah.
How do you keep the blinders on and just execute on your business?
Yeah, I mean, part of it is that optics. Like I get concerned, even like when we're looking at car washes. My partner has been doing triple net sale leasebacks for 20 years. So it's not we're looking at different property types, but it's really focused on the single tenant space, which is very, very different. It's like an investment banking kind of financial engineering sort of space. And you can apply the same logic to different property types. So that's really it. It's like, okay, we're going to focus on single tenant. Maybe it's a sale leaseback. Maybe it's a quick flip. Maybe it's a long-term hold. And we'll focus on multifamily. That's it. We're going to do those two things. Right. He's kind of the head. He has like a good pipeline through where he works, his family office, kind of getting deals. Head of that kind of business. I'm kind of the head of the multifamily business. And just, we don't have ADHD. We're not doing the shiny object thing. We're focusing on just these two businesses.
I like that. So it's focus, right?
Yeah.
It's focus and accountability. I feel good surrounded by partners where we each specialize in one thing and we have incredible trust in one another to bring deals to shoot at, right? But like, I worry about some of these folks that, I'm sure you're probably on this person's inbox too, where for a really long time it was multifamily, right? And it was a paving company. And then it was some sort of condo repositioning deal in a state that they don't live in, and all kinds of other stuff. Right. I'm like, are you just jumping for AC fees, or right? Is there some sort of commonality across these various businesses?
Because that's what people did, and we were very disciplined through 2020 to 2023. We didn't buy things with floating rate bridge debt, right? Based on our conservative background at Nuveen, at Berkeley Partners, all fixed rate debt. All our deals are performing. Now people start kind of pivoting kind of all over the place. And it shows a lack of discipline and kind of what's their track record, right? Like what's their track record with those deals? What's their track record going to be for the car wash deal that they bought because they got bored with multifamily? You have to look at people's track record, have those things performed, full life cycle.
Love it. So believe it or not, we're already in Q2, which is crazy. Yeah. Year's 25% over. My quota keeps going up. Things keep getting busier and busier. What does the rest of the year look like for you in the business?
Yeah, so we have big goals, $50 million of multifamily deals and $50 million of triple net deals. I have something called Jesse Isler has the big ass calendar.
I have one too, yeah we love it.
So we have the close dates for each one of these deals in there. Those close dates are creeping up. We'll see. So we just kind of chip away. And, I have a team of analysts and I have them send me a weekly status report. And they have goals of talking to a certain amount of brokers to source deals, underwriting a certain amount of deals, and eventually you can back that into getting deals done. So we're ahead of schedule with the multifamily, kind of making calls, underwriting deals, making offers. On the triple net, it's been a little bit slower because we're kind of getting that started up. But yeah, I mean, we have big goals, and I've been manifesting and meditating on all these things. So I think they're going to happen.
Nice.
Yeah.
I wish you nothing but the best of luck. Before we wrap up, your analyst team, what's the financial model for them? Do you pay them a base or is it performance based? How does that work?
So yeah, I pay them a base as kind of a 1099. We also, if we get deals done, they get like a small little piece of getting paid, not like GP equity, just getting paid.
Right.
But I've instituted a program and I've assigned them to different broker shops. If they get deals done, they get almost like a commission. So they're acting as brokers. So I'm just texting them like, this guy's not answering your email. He's not telling you the whisper price. Call that guy up, get in his face, build a relationship, and get the information you need so you can get the commission.
Right.
Right. So that's how we structure it.
Nice. You don't tell them to say, have you seen my boss's last name?
I'm going to break your legs. That's right.
Awesome, man. Dude, you've had a very inspiring story. I've always looked up to you and very, very thankful that you're here and sharing your story with us. I wish you nothing but the best of luck. I think just what I've seen from you out of the meetup, I was going to the ones that you used to throw back at the truck yard, right? Like right after I met my wife. Been around a long time, man, and I think the slow and steady wins the race, right? Definitely applies to you. You've been super consistent, very well, respected and liked in the marketplace. So whatever you're doing, brother, keep it up.
Thank you for having me. I appreciate it.
Of course. We have to have you back after you crush those goals in the rest of 2026.
Yeah, we got to look back and see.
Yes. We'll be like, he said it here, folks. You heard it here first. All right. Well, that's a wrap. Episode 26 of the More Doors podcast with my good friend and fellow investor colleague, Nick DiLeone. We are going to see you again here real soon. Want to give another quick nod out to Jesse at Tor Studios. Go check Jesse out at torestudios.com. He's going to hook you up. And subscribe to the show. Send us an email at office@deepbluere if you have any guests or you have any questions about what we're doing here. And we'll see you again real soon. Peace out.